Yo, gang, Gem fam, Gem gang, orangutan, what is going on? Welcome back to another video. Welcome back to Dropping Gems FX. You already know my main goal is to lace you guys up with advice and tips on how to take your Forex journey to the next level and bring you guys along my trading journey as well. In today's video, we're going to be covering candlestick chart patterns. More specifically, a reversal pattern that you should have in your arsenal whenever you're looking at a chart. So before I start this video, I just want to encourage you guys to smash that like button, smash the subscribe button, turn on those alert notifications so that every time I post a video, you will be notified. And go ahead, head over to my Instagram. It's linked right here and it'll be linked in the description below, and follow me on Instagram. Now with that being said, let's get right into the video. Alright guys, we are on GBP USD. We're on the daily time frame. And as I mentioned before, we're going to be going over candlestick chart patterns, specifically reversal patterns. The candlestick pattern that I have right now in front of you is labeled as a hammer and a hanging man. Now, I know what you're thinking. You're thinking DGFX. They look the same. DGFX, you know nothing. They look the exact same. How do they have two different names? I don't know.
Stop it. Get some help.
Well, I'm going to teach you right now how to, number one, identify these candlesticks, and number two, differentiate between a hammer and a hanging man, because that's very, very important. Now, as you can see, I had the option to change the color of these candlesticks, but in the identifying, pointing out, highlighting, whatever you want to say, seeing and pointing out these candlesticks has nothing to do with the color. The color does not matter of the candlestick. So I just wanted to make that clear to you guys, and that's why I have both of them the same color. Okay? So on the left hand side, you will see what's called a hammer, right? And below that is exactly what the candlestick looks like, right? On the right hand side, you see a hanging man. Below that, that's what the candlestick looks like, right? So the hammer, when you see it in the market, it is going to look like a hammer. You can see the handle, which would be the long wick at the bottom, and then obviously the body of the candle at the top would be, you know, the metal of the hammer, I guess, or the hammer head. Okay? And if we go over to the hanging man, right, you will see the body of the hanging man and then the legs, which is the long wick at the bottom, hanging, right? So that's why these candlesticks were named this way, right? That's what you need to visualize when you look at these candlesticks, right? Now, let's move on to the identification criteria. Number one, the body of the candlestick is at the upper end of the trading range. Now, what is a trading range? Okay, let's go ahead and use some tools, okay? So, if you understand the anatomy of a candlestick, and I'm not sure I went over this in any video, so if not, I will go over it in the next video, right? The anatomy of a candlestick. So, in this particular explanation or example, this candlestick opened right here, right? Okay? And you know what? Let me back up, right? So, every candlestick has what is called an open, a high, a low, and a close, right? So this is going to be the open of the candlestick, okay? This is going to be the open of the candlestick. Now, the next one is high, right? So we don't have a high per se. The open is the high because we don't have, you know, the candlestick going above the open, right? If it went above the open, we would have a high, but we don't, right? So what's next? A low. This would be your low. And let me make it a different color so that you guys are aware. This would be your low, okay? Right here. So price, at one point in time, came all the way down here, and it was a huge candlestick, right? The body was huge, but for whatever reason, price was unable to sustain that area and retraced, right? And it showed this huge wick, right? This means that price was there at one point and then it retraced. So now price closed and this is the close. And you know what? Let me make this a different color as well. Okay. Right? So that is that. We have an open. We would have a high, but in this case there is no high. We have a low. We have a close. And we have a wick, right? So the body of the candlestick is at the upper end of the trading range. This whole thing is the trading range. Now, we're at the upper end of the trading range. So that means that the body of the wick, which is this, the body, the open and the close, is at the upper end of the trading range. Okay, it's up here. It's not down here. It's not in the middle. It's up, upper end, right? I don't know how else to kind of explain that, but that's what it is. On both hammer and hanging man's, that's what it is. Upper end of the trading range. Now, number two, the lower wick should be at least twice the size of the body. Now, if we go ahead and do this, all right, at that point in time, the wick is definitely longer than the body. Twice the size as the body, okay? It's almost 3 times. But obviously, this is a hypothetical. I literally just drew this. So we're going to take a look at an example later on of both a hammer and a hanging man in the real markets. Because obviously, I drew this because I know what I'm looking for and I wanted to illustrate these criterias. So number 3, there should be a very short upper wick, preferably no wick at all, right? So you want no wick, or if there is a wick, it's very short. We understand that the market is not perfect. So if there's going to be a wick, it needs to be very, very, very short, okay? So very short upper wick, all right? This is a hammer. This is a hanging man. Now that you understand how to identify these candlestick chart patterns, right? Now, how do you differentiate between a hammer and a hanging man? Because they look the exact same. Now, this is going to be where color comes into play, right? So if we go down here, the differentiation criteria for a hammer, the left side of your screen, a hammer. So a hammer comes after a decline or a downtrend, right? So price is falling, and then you have a hammer, and because it is what? A reversal pattern, you have this hammer, and then price comes back up, right? We can see that here, right? And the downtrend doesn't necessarily need to be a long downtrend. It can be a short downtrend, right? It can be a short downtrend, and then you have the reversal. As well, number 2, you need not have any confirmation on this candlestick, right? So when you see this, and you correctly identify a hammer, and you go ahead and get into a trade, you know what I'm saying? The probabilities of you catching a reversal are very, very strong. So that's what we want, right? And boom, as you can see, this is the illustration of a downtrend, the hammer popping up, and then a reversal. Okay, so moving on to the hanging man. Right, hanging man comes after a large rally or an upward trend / all-time highs, right? So a large rally and upward trend mean the same thing. Price is buying, all-time highs. Oh my God, it's never been this high before. Then boom, here comes a hanging man. You identify that it is a hanging man, and you wait to see what happens next because it does need to be confirmed. So when you have a hanging man come in the picture in a market, you need to be, kind of reactive at that point, right? You need to be reactive at that point, and the next candlestick that shows up, if it is bearish in any way, you can be comfortable enough taking that sell or that short position. But there are some times where you have a hanging man and price just comes to a stutter, you know what I'm saying? Maybe it ranges before continuing up to a higher level, you know what I'm saying? So you need to be reactive, and you need to confirm this reversal pattern for a hanging man. So it's not as cut and dry as the hammer. Okay, so you need to keep that in mind, right? So let's look at a definition or a real life example of a hammer. Okay, so we're gonna go down here to the chart. You know what I'm saying? And we're gonna look for a hammer, right? We're gonna look for a hammer. Okay, I kind of see one right here. Can you guys see this with me? Let's go ahead and dissect this. Okay. Right, so we have, what do we have? Okay, a long wick, one long wick at, or long lower wick. Okay, long lower wick. What else do we have? The body is twice the size of the wick, okay? Or the shadow, or whatever you want to call it. All right? Now, this is where it's kind of tricky because as you can see, we do have an upper wick, okay? But it's not large, right? It's very small, okay? So I still would consider this. Some people might not. You may agree to disagree on this, but I still will consider this a hammer. So we have a small upper wick. Now, even if you were kind of, you know what I'm saying, indecisive at this point, and you're like, okay, it is a long wick, long lower wick. The body is twice the size of the lower wick. But we do have a small upper wick. And I remember DGFX saying no upper wick, or if the upper wick is there, it has to be very short. So I don't really know about this. This can go either way. Well, don't, rely on just this to make your trade. What else do you see, right? What else do you see in the market? Okay? What else is happening? Right? At this point in time, all of this didn't happen. So let me just take this away. At this point in time, all of this didn't happen. And if you can see, we have equal lows where price came in this area and reversed, right? So we have a support here, okay? We have a support here, right? What happened when price came and touched this? Boom, super wick. Look at this super wick, okay? Reversal, boom. And continued up. Came back again. Current price. Price throws you a hammer. What are you gonna do? You could have even took the trade up here. You still would have been good. You know what I'm saying? If you weren't too sold on this hammer and this structure back here, you could have waited for confirmation. You know what I'm saying? And took it to the last structure up here, right? A good 1 to 2 risk to reward ratio. Not necessarily. You would have had to respect this structure. You would have had to respect that wick and put your stop loss here. And you know what I'm saying? I would have targeted, way more than a 1-to-1, or not. It's not even a 1-to-1 at that point. So I would have had my target somewhere up here, provided that I had enough. Confluences to support that bias. But regardless, let's see what happens. I know for a fact price bought from this point. Let's see if it comes back, right? So boom, at this point, right, it's a 1-to-1 basically. Not bad. It's not really ideal. It actually is bad. You know what? Let me not say anything. It is bad. So there you go. There you go. You could have even waited for this retracement. Now I'm gonna get into the Fibonacci retracement. So let me not do that. But let's real quick highlight the golden zone. Highlight it. Boom. You know what I'm saying? Pow. I'm not going to touch on this. Go watch the last video if you want to figure out what I just did. But you missed the movement. You waited. You decided to wait. Boom. Stick the fib on that, John. Wait till it hits the golden zone. Bow. Look at that. Look at that. That is crazy. You with me, boys? You with me?
Oh, I won't let you go.
You know what I'm saying? Spam the like button if you see that. Spam the like button if you see that move, man. Come on. Come on, baby. 13-1. We like that. We like 13-1. All right? Now, that's an example of a hammer. Let's look at an example of a hanging man. Okay, let's see if we can find one. We have to identify hanging man. If you guys can see it, spam the comments below and let me know. Okay, looking for a hanging man. Now remember, we need to look for a hanging man after a rally. After a rally comes a hanging man. Okay. Okay, guys, look, we found a hanging man after a large rally, an extended rally. Now, first, let's go through the identification criteria. Number one, long, lower wick, right? Number two, body needs to be twice, or wick needs to be twice the size of the body. Okay? Now let's measure that out. If I take a box and recreate this, right? That's the body width or length, I guess. Body length. We copy that. Okay, two bodies, still wick. Okay, so it's bigger than the wick is twice the size, more than twice the size of the body. Okay, boom, smash that criteria. Number three, no or very little upper wick. We have that. Boom. Very small upper wick. Very small upper wick. We're good. Okay. So past the identification criteria, let's go on for the differentiation criteria. Number one came after a long rally, right? We had this uptrend, this extended uptrend for a while. Boom. This ranging right here at this zone, and we caught a hanging man. Okay? So boom, confirmation. Right? We're definitely at some structure here. You know what I'm saying? Some resistance. More confirmation. Probably can find on the lower time frames, as well as this. This kind of looks like a triangle formation if I go to lower time frames. Let's see if I can find where I was. I hate when this does that. I think we were right here. Okay. We have kind of a wedge. Kind of a wedging chart pattern. Okay? Until price finally broke out of said wedge. Alright? Broke out of the wedge, came back and retested the breakout. You could have got in here for a sell, short opportunity. Boom. Stop loss, top of the wedge. Taking it to the next support level. 1 to 6. Beautiful trade. Beautiful trade. Okay? So that's the hanging man. Okay? That's the hanging man. Now, guys, I don't want to make this video too long, so if you enjoyed the content in this video. Like, subscribe, share this video on your Instagram, share it on your Twitter, share it on your Facebook. Tag me in it, and I will give you a shout out in the next video. I'll post it on my personal Instagram, okay? Also, I don't know if I just said this, but subscribe. 50% of you guys are not subscribed. That's Bella. 50% of you guys are not subscribed to the channel, and I need you guys to support me. We're almost at 100 subscribers, so go ahead and subscribe, and tell your mother to subscribe. Tell your father to, your little brother, your little sister. Tell your dog to subscribe. Tell your cat. I don't care. Get me up there. Let's go. And by the way, while you're at it, go ahead and check out these 2 videos on the screen right now. It might help you. It might help you. If you didn't know what I was talking about when I said Fibonacci, when I brought out that tool, go ahead and watch the last video, okay? I'll catch you guys next week.